I want to focus on the point that you said, this is a similar sort of sell-off that we saw around 2008, right before gold really accelerated. What could be the catalyst for that acceleration this time? You mentioned a reversal of where we are now. What would be like particular specific triggers that could set gold running up again?
There's some very important ones. Look, the formation of the thesis is there, right? Still. So central banks are still acquiring gold. We're still seeing that in the official data and likely happening also in the unofficial data. But the macro reasons behind where gold could actually start rising significantly is certainly on the reversal of the view that we're going to see interest rate hikes. Going from hikes to cuts could be a very significant shift. I think that the dollar itself is very overbought. And in particular, with most of the developed countries, if you looked at emerging markets, you can see that emerging markets have been very resilient despite this move in the dollar, which is usually very telling. When you see these types of movements, you tend to see emerging markets fall apart. They didn't. They actually held up pretty well, which means it's just smart money taking the risk of going above and beyond to riskier parts of the market and not taking that risk or that exposure lower when they saw the dollar moving higher. That is very interesting because they believe in the long-term story of those plays. I always pay attention to those things. The same thing is happening with silver. Pay attention to how the silver miners actually perform very well, relative to silver itself. If you look at the silver ETF, SIL, Silver Miners ETF, relative to silver itself, we went straight up on that chart, and that's not usual. If you look at the COVID era when we saw a big sell-off, what we tend to see is that the miners tend to lead to the downside. So that's all little clues in the market that we're seeing real money, real capital staying with the thesis over the long haul. Answer your question, I think it's a combination. It's rates and it's the dollar that are likely to be reversed. And when that happens, I think it's going to have a big push in gold prices as well. And positioning, look at the positioning and the flows. Gold itself, in terms of even in the futures market, the CFTC positioning is very extreme in terms of being low and not high. And so that's going to be creating as well a lot of pressure on the upside for gold, in my view.
Right. And, to your point, the dollar has been very, very strong. It's been on a tear as we've seen the war in Iran begin and escalate. Two questions on that front, but let's assume that we have some kind of, shall we say, resolution for now with the war in Iran, and whether or not real agreements are made that really address the nuclear uranium issue, that's a whole other conversation. But if there is at least the appearance of hostilities being paused or ceased, what does that mean for gold?
I don't think it changes much of the story. The gold ultimately, despite the fact that in the near term it does have an impact on monetary policy, and if you think it's going to be pausing the situation when it comes to the conflict itself, from a monetary policy perspective, would only add to the case that central banks, especially the Fed, would be in a position to start cutting rates again, not hiking rates. And that reversal would be very positive for gold. But I think it's important to always remember that deglobalization trends, and maybe one of the main reasons why gold was moving the way it did right after we had that interview. You saw that gold, our first interview here, or not first, but our last interview about 8 months ago, if I'm correct, gold prices really began to move in a large way.
Before we go any further, if you're interested in real macroeconomic insights, gold, the US dollar, and the future of global finance, make sure to subscribe and turn on notifications. We publish in-depth analysis like this every week. Now, let's get back to what could be one of the biggest shifts in the global monetary system.
And maybe that was in sort of leading this conflict that we saw in Iran. None of us know, but that would be very normal to see that as one of the main reasons for it. And then after that, we saw the big decline as the conflict, if you will, supposedly got better. I think that deglobalization is a factor that plays in a favor of gold, and deglobalization is usually very much aligned with amount of debt in the world, which we are at record debt levels relative to GDP globally. And so debt creates wars, and that's the situation we're in. And so when you have debt at the levels that we are in, it suppresses growth at some point. It becomes very difficult to create units of growth of GDP relative to debt. You need more debt for less growth. And as you see that occurring, eventually you start getting to populism. You start seeing new political candidates on the right and on the left looking for promises that are just promises because they will never be fulfilled. And they're usually aligned with, we're going to create growth, we're going to fix inflation, we're going to do this. And that's just populist ideas that will never work because inflation is a much deeper problem that is related to deglobalization, disruptions in logistics, and hard asset situation that I just mentioned of being misallocated. And so that is at the core of the problem here, the supply aspect as well. And so, eventually it all kind of feeds into gold when it comes to deglobalization. So I just wanted to give you that caveat because despite the fact that it does have an impact on monetary policy in the near term, the bigger impact is that deglobalization is here to stay. It's a longer term trend that is unlikely to change anytime soon.
Well, with regards to the strength of the dollar that we've seen, and as we've said, that does impact metals prices, whether it should or shouldn't, it does. There was speculation that a big reason behind the United States' actions in Iran, as well as Venezuela, was to defend dollar dominance, particularly the petrodollar, as we were seeing a trend towards de-dollarization, the bifurcation of the global monetary system, an increase in oil being sold outside the US dollar, really threatening the fundamentals of the petrodollar. So there was speculation that that was perhaps one of the reasons behind these conflicts. And it now appears as though Treasury Secretary Scott Bessent may have just given the clearest indication yet that there is a lot of truth to that argument. In a recent interview, Bessent said that the United States moved against Iran and Venezuela in part because they were selling discounted oil to China outside the traditional dollar-based system, that they were creating alternative channels for global energy trade that bypassed the dollar. Let's take a listen to what he had to say, and then we'll dissect his comments on the other side.
Dollar dominance is essential, and everything President Trump is doing here is, if you look, the new Venezuela is invoicing in dollars. They're coming back onto the dollar system. They've been sanctioned. They were not allowed to translate or to transact in dollars, and now the dollar is going to be the centerpiece of their trade. They were selling discounted oil to China and not getting dollars. We're seeing in the Iranian negotiations, the Iranians will be invoicing in dollars. So everything we are doing is pushing the dollar back. It's never left as the centerpiece for the global currency system, but we're reinforcing it. I would anticipate when the Russia-Ukraine conflict ends, that Russia will want to come back in the dollar system because, again, the dollar, it's our liquidity, it's our capital markets, it's the depth and breadth. Everyone wants to be here. And I think many times, the great thing about the United States is we course correct when we go too far one way or the other. And I think we should not be shy about flexing where we have advantages, and where we have advantages, share with our allies and push back on those who are not aligned with us.
I mean, there he is basically saying that the U.S. intends to defend dollar dominance and has been doing so, and that Iran and Venezuela were not just geopolitical challenges, they were selling discounted oil to China outside the traditional dollar-based system, and that meant that energy, one of the biggest sources of global dollar demand, was increasingly being traded through alternative payment channels. And it sounds to me that according to Bessent, the administration's strategy to disrupt those channels, push global oil trade back towards dollar settlement. As we know, the dollar's role relies on oil and other commodities being priced, invoiced, financed, insured, and settled through the dollar-based financial system. And to me, the takeaway is not that the dollar is about to lose its dominance, but that the U.S. sees enough pressure from de-dollarization that it is actively working to defend the dollar's central role.
What's fascinating here is that this discussion is no longer just about gold prices. It's about whether the US dollar can maintain its global dominance in a rapidly changing financial world. And according to Jim Rickards, the answer may depend on something most investors aren't even watching.
Using the military might to defend the dollar. I mean, what is your read on what we heard from Besant there and what it means for the dollar?
We've been moving away from the dollar system for a while, and the dollar system still is extremely relevant to the global economy. What he claimed to be, everyone wants to be here, I'm using his words, I wrote it down as you play this. It is partially correct. It's not like everybody wants to be here at all, but it is what the system is built on. And I would say that one thing that breaks that system is a strong dollar. It can't be that strong. It has to be the value over time. And the dollar, this is the whole point if you want to get one thing out of this whole conversation, is that the dollar cannot be this strong sustainably. Can it be strong for a month or two? Sure. It's what we've seen. Can it go long? I don't think so. I think this is a very unsustainable path for the dollar system. We need to devalue it by a very considerable amount relative to other developed economies, particularly to those that trade with the U.S. and export or a lot to the U.S. or in the U.S. is in a position right now that it needs to make those adjustments to improve its trade balance. The U.S. has real issues right now, two big problems, and Besant is very much aware of this. It's a fiscal deficit and a trade deficit. And the fiscal deficit, the only way to fix it, we all know it, it's reducing government spending. But if you do that, you go into a depression. You can't do that. So what are you going to do? You're going to lower rates because that's part of government spending. In fact, it's one of the largest government spendings right now. And that's a non-growth. It doesn't create anything. It only goes back to spend on paying down its own debt. So if that goes away, that reduces your deficit. Well, what about the trade balance? The trade balance is a real problem as well. It's compounding the debt problem because we're only importing a lot more than we're exporting. And I know a lot of people tend to say, but in order to be the reserve currency, you have to be a net exporter. Yes, but not to to the magnitude that we're seeing today. That is too extreme. Just as much as the dollar being so strong is also too extreme. And so you need to see those two things change. I think that's going to be one of the most important changes in the macro over the next 3 to 5 years, is going to be how the dollar is going to lose this momentum that we're seeing recently, reversing it and going significantly lower in order for the dollar system to survive. If you want the dollar system to survive, you need a weaker dollar. And I think we're going to see it.
This is where everything starts to come together. If central banks continue increasing their gold reserves while confidence in traditional reserve assets slowly declines, the global financial system could look very different over the next decade. That's why this conversation matters far beyond the price of gold alone.
Well, to me, it's sounding like they want to keep the dollar as the global reserve currency. They're seeing the trend of de-dollarization. They want to maintain the petrodollar status, that oil should be sold in dollars. And typically the agreement was, at least with the Saudis back in 1971, was that those dollars are then recycled back into the U.S. economy in 1973, I believe. So it seems as though it's working, at least in the short term. Though the irony, though, here is that it could also encourage countries to accelerate their search for alternatives over the longer term. Do you see the strategy, sort of reinstating the dollar, helping to keep the dollar dominance, or does this make the case for gold stronger as they see a need to find that mutual reserve asset?
Yeah, look, the neutral reverse, I guess, neutral assets that have been used here recently have been gold. You can maybe claim Bitcoin. Who knows if Iran was using Bitcoin? It is, I think, something I caught on for sure is the fact that how the dollar has been moving higher, and maybe those forces of the conflict causing this change, and potentially also causing Bitcoin not to be used as much in that scenario now, also causing some pain in that asset. But I think that the multipolar world is the right lenses of think about what the future will look like. And I think that gold is going to be that main neutral asset that will hold everybody accountable for their own monetary systems. And so monetary systems are going to have to go back to some sort of, fixing. I'm not saying complete fixes, but some sort of anchor to a real asset. And I think gold is going to be that historically the only asset that has centuries of history serving as the monetary metal. And so it's very likely that we're going to go back to that world.